Yeah, I mean, I absolutely think that this reaction to energy prices, because as we've seen energy prices coming down, CPI is coming down, PPI is coming down, we know that that's a positive. And so I think there is going to be a real emphasis on what energy costs are going to do. I mean, we're moving into a different season, right? We're moving out of summer driving season, but we're moving into home heating season in the northern half of the country. And so, how does that impact consumer confidence? I think that there needs to be a real, close eye spent on where energy is going. I mean, we don't have to look just here in the United States, obviously, with what's happening in Europe with pipelines, but and a lot of, there might be some enthusiasm about what's happening in Washington over the last several days as it relates to energy infrastructure, but we know that that's going to take years for that to actually play out through energy prices. And so I think it's an important point, and I do think that there's going to be significant correlation now that we know that there is correlation between when energy prices are coming down, that CPI and PPI are coming down. There's even more emphasis on what energy is going to do over the next 8 to 12 weeks, particularly as the Fed, we don't hear from the Fed again until September.
Josh, back over to you. You've been very vocal about the imbalance between supply and demand when it comes to energy. This rise in oil prices and energy prices coming after the IEA raised its growth forecast. Are you concerned about the potential weight this could have on the markets, not just today, but going forward?
Yeah, I think this is a really critical point. It's not about the supply of oil and gas in the aggregate. The United States and Canada have a 200-year supply of natural gas. We are the Saudi Arabia of natural gas. That's not the issue. The issue is the disconnect between where that natural gas is needed relative to where it currently is located and what is the spread that a corporation can collect in moving it from one place to another. So I've been talking about LNG on the show, another all-time high right now, raise the roof. This is, like, to me, this is the most obvious opportunity in the market. It doesn't mean go straight up and there's no dips along the way. But when you think about the price of natural gas overseas, the price it is here, a huge spread in between. Let me show you a stock I'm not in. To illustrate what's going on. New Fortress Energy, NFE. I wish I owned it. You can't own them all. Look at this stock is about to break out of an all-time high. This is one of those companies that specifically addresses this acute issue. And the midterms are coming up, and the Russians like to play with our politics as their hobby, and that a company like LNG, for example, Cheniere, they went from having a third of their energy sold in Europe to 2/3. And when they do that, they're not supplying Asia, which also is going to have acute shortages for liquefied natural gas. So, these are the areas in the market that I would be focused on, and not looking at how many barrels of oil or how much production. It's not about the production. It's about how do we supply the markets where it's needed most and how much money companies can make in filling that gap. And there are probably 10 publicly traded companies that if they had more boats, if they had more terminals, they couldn't supply it fast enough. That's an obvious bull market that's taking place, regardless of all the Federal Reserve stuff.
All right, something we have to keep an eye on right now. WTI crude up now 3% after the IEA raises its growth forecast for the year.